Hello everyone, welcome to my channel. Today, let's predict Apple stock. I am a swing investor, and I will not consider the price changes of a stock 1 month later. This channel only makes short-term price predictions for stocks, usually 1 to 3 weeks. Welcome to subscribe to this channel. Apple stock has fallen for 8 consecutive trading days, and the current stock price is at its lowest level in May. It is obvious that investors' enthusiasm for buying the stock is declining significantly, and the market is slightly in panic. The main reason for this wave of selling of the stock is that the company is facing a series of blows. In addition to Trump's tariff threats, the company has to face pressure from 2 U.S. judges, European and global regulators, state and federal lawmakers, and competition with rivals in the field of artificial intelligence. Investors seem to have noticed that these adverse factors may affect the company's profits, so they continue to sell and put pressure on the stock price rebound. Technically, the stock currently seems to be turning from a bullish trend to a downtrend. The stock had fallen to a key support level at the close of Friday, but this support level may not be solid. The stock's volume on Friday was higher than the previous 2 trading days, but not much higher, which indicates that as the stock price falls further, investors are cautiously buying the bottom, but there does not seem to be much money flowing into the market. From the 30-minute chart of the stock, we can see that the stock was in a consolidation trend from May 12th to 16th, but the bulls were not willing to push up the stock price. Then the bulls lost the market pricing power and the bears took control of the situation. The stock price stopped falling at $193 on May 23rd, because the stock price also stopped falling and rebounded at this position on May 7th. There should have been long capital intervention here before, and the significant increase in the stock's volume from May 2nd to 7th seems to prove this. Of course, this does not mean that $193 is the bottom of this wave of selling. If the stock price rebounds at the current position, it will still face great resistance, because there is already a lot of locked-in capital waiting to be sold in the area above the current price. In addition, there does not seem to be much long capital flowing into the stock on Friday, which means that even if the stock price rebounds, it is expected that the bulls will find it difficult to continue to push the stock price up. Through the position distribution of the stock, we can see that most of the current positions of the stock are concentrated in the area above $193.50, which has formed a certain resistance to the rebound of the stock price. There are not many positions distributed in the area below the current stock price, which means that it is easy for short sellers to further pull down the stock price. The data gives the support level of the stock at the level of $185.80, which I think is possible. But if the market sells off severely, it is also possible to fall below this price. The market seems to have not digested the current problems facing the company, which means that the stock may still lose another 5% or more on the basis of the current price. Some analysts point out that the retail price of iPhones produced in the United States may be around $3,500, while the current retail price is about $1,000, and it will take years to rebuild the necessary production capacity. However, some analysts point out that it may not cost that much to produce iPhones in the United States, but it should be more expensive than the current pricing, and it will take a long time to shift the supply chain. The current production of iPhones is still concentrated in China. Although Apple is moving more final assembly of iPhones to India, many components in the device still come from China. As for why Apple is determined to make iPhones in China, Apple CEO Tim Cook said in an old video of 2024 that Apple makes devices in China not because of lower labor costs there, but because of the scale and quality of the labor force. Apple's devices require extremely precise molds and advanced material handling technology, and Cook said that Chinese engineers have the skills required for these technologies. Then another point is that Cook does not seem to want to offend Beijing and Chinese consumers. Of course, he also does not seem to want to be trapped in China, so moving production lines out of China is an inevitable and slow process. Nevertheless, it seems unlikely that iPhones will be pulled back to the United States for production. Cook may try to appease Trump by moving production of other products to the United States, and Treasury Secretary Scott Bessent said on Friday that the government wants Apple to produce more chips in the United States, which may give Cook a chance to get out of the iPhone issue. This is the volume of Apple stock options based on the distribution of strike prices due on May 30th. It is obvious that the proportion of bearish trading volume on the stock has increased significantly after President Trump's threat of a 25% tariff. The strike price range with a high proportion of call option trading volume is between $195 and $220. The strike price range with a high proportion of put option trading volume is between $180 and $200. This set of data reflects that the stock still has the risk of further decline in the short term and may hit $180. The current price of the stock has deviated significantly downward from the 5-day moving average, which means that the stock may experience a technical correction, but the room for the stock price to rebound does not seem to be large, because there is a lot of resistance in the area above the current price, so the bulls may not be able to continue to push the stock price to rebound. Although the stock still has good fundamental support, the series of problems currently faced by the company may still cause its stock price to fall further. In other words, this wave of bearish power may not have been released yet, and the stock price may still adjust further downward. As for the target price, I think the area below $180 means that the stock will enter the oversold area, which is also the best position for long capital to intervene. So I think it is unlikely that the stock will fall below $180 in this wave of selling. Of course, the bulls may also block the bears in advance, but $180 is still my current target price. Okay guys, that's my price prediction for Apple stock. Thank you for watching. If you agree with my analysis, please share and subscribe to my channel, and I'll see you in the next video.